discuss this in detail, we're joined now by senior economist at AIDC, Dick Forslund. A very good evening to you, Mr. Forslund. Thank you so much for speaking to us. Perhaps let's just first start with, would this be the 9th, 10th or 11th interest rate hike since November 2021?
Well, it will be, they have hiked the interest rate to 4.25 since it was low at 3.5. I'm not sure really. Is it the 10th? Something like that. Unlike others you interview, maybe it's not even the last one, because with the logic that the Reserve Bank is abiding by and into now, if there's other events, if the American central bank is increasing the interest rate, then the logic of the Monetary Policy Committee is to follow suit. So I'm not sure that this is the, if you have a policy of free capital market and you think that you can fight inflation in this way, then it might not be the last one.
And I was asking that to just get a sense of how long South Africans have been enduring this, because as you rightly say, every now and then we're told that the interest rate hike cycle is peaking, so therefore we may see the last of it. But borrowing costs, are they at their highest since 2009, as some say?
Yeah, since 2019, or since the COVID crisis started, something like that. Since December 2019, I believe. I think that the interest rates has been higher historically before that, but I mean the unemployment rate now is the expanded definition of unemployment. You have over 42% of the people in the working population in unemployment. And of course, if you increase interest rate, then you are pushing this further. You are basically dampening economic activity in the real economy, because you are dampening economic demand. So with this policy, you can expect that unemployment will not go down, and well, you can expect rather that the logic of this is that you will increase unemployment further. That is what happens when you are increasing interest rates. So it is a brake on the economy.
So there's a view by someone, you can just educate us on this, that the bank has to do this, as you say, according to its own policies, and to ensure that it doesn't, overload its own bank balance by bailing out investors who are actually paid in generous yields to hold long-term debt. Quantitative easing as a concept in South Africa, is it applicable? Is it appropriate?
Well, it was suggested by many economists when the COVID crisis broke out in April 2020, and the Reserve Bank governor answered that this was not, that it was against the Reserve Bank law. But as was pointed out to him, that is wrong. The Reserve Bank have the right to directly lend to the government at any interest rate they choose, or a negotiated interest rate. But I mean, that is one measure you can take in an extreme situation as we have. But I mean, another problem for the government, and might be also with the growing panic over the decreasing value of the rand, that is that borrowing in foreign currency, which the government has been doing now more and more from the IMF, from the World Bank, etc. It makes foreign lending more expensive if the rand is valued lower, because you have to first change your rand into dollars, and then you pay back interest on the loan and the loan themselves. So one advice from economists who are not in the mainstream, as myself, that is that the borrowing of in dollars and in foreign currency, it has to be reversed. The government has to turn to internal funds, like the huge over 2 trillion government employee pension fund, which doesn't need sort of market interest rate to pay pensions and benefits to the members.
All right.
But I mean, another measure also, which I also think that the government is not considering, unfortunately, that is price controls, of course, on food and necessities, because that is the main problem for the majority in the country. And I mean, the 2021 goods which are today exempt from VAT, they should be they should be a goal for such a price control policy. As you remember, the Competition Commission in March, they put it to the retailers that they were making undue profits in this situation. So I think it's better that you have price controls than that you are in a logic that you have to increase the interest rate more and more and more, and in that way you are fueling unemployment more and more.
And
so pricing controls and stop lending in foreign currency.
So I was going to get to the whole food and fuel inflation outlook if there is another rate increase. I think in March some economists were saying that we're seeing a turn, that is easing somewhat. So what would happen if, under the current conditions, there is another rate increase, no matter how minimal?
Well, if this is a rate increase, then maybe the rand will go closer to 19 rand again, 18 rand 90 cents per dollar. But then any international events or any internal events, let's say that the electricity crisis is deepening, or any political event, we have this global situation with Russia's invasion of Ukraine, or any event that the Federal Bank in the United States increases their interest rates to take care of their inflation or to strengthen the value of the dollar, etc. Well, then if you have a free market monetary policy, then you kind of abide by that. And then to please the financial industry and speculators, and if you are desperate because you have borrowed too much in foreign currency, then you will sort of follow suit and you will increase the interest rate. So it's kind of like it really depends on what paradigm or what logic you choose to be in. And the Reserve Bank, I'm afraid, are in a macroeconomic framework which is, well, it's detriment to employment in the country and to the economy. So the only hope I see now are things like the cleaning and greening employment program in Gauteng for 6,000, which they have started. But of course, it has to be financed also, and I hope they don't finance the program by taking more loans from the World Bank. I have seen news that is on the cards, but they should not do that, according to me and economists who are not in the mainstream, so to speak. But the mainstream right now is failing, and the interest policy rate hikes of the Reserve Bank is failing. Price controls, stop taking foreign loans. That's what I would say. A paradigm shift is what needed for the monetary policy.
Dick Forslund, thank you so much for speaking to us. He's a senior economist at AIDC. All right.